A trade war tsunami has just slammed into the Indian stock market, and it was all kicked off by a sudden move from the United States. Today, we're going to cut through all that noise to figure out what happened, why it happened, and what could be coming next. We're doing this all through the lens of analysis from the financial channel Himalayan stocks Crore. So let's dive right in. To get a sense of just how bad this is, you only have to look at the words the source analysis is using. Seriously, they aren't talking about a simple downturn. No, they're calling it a bloodbath and a market meltdown. That's the level of financial panic we're dealing with here. And this really gets to the heart of this whole explainer. How in the world did this happen? And maybe more importantly, what's next? We're going to unpack the thing that started the crisis, the economic fallout, and all the potential paths forward, all based on what the source is telling us. Okay, so first things first, let's just get a grip on the sheer scale of this meltdown. The source describes this past week as one of the absolute worst of the year for Indian stocks. It was a sudden, super intense wave of financial turmoil that honestly caught almost everybody off guard. And look, this pain was everywhere. This chart shows the main Sensex index just diving 600 points. But the source makes it clear that was just the start. The Nifty 50 also dropped a full percent. But the real damage, the real bloodbath, was in the small and mid-cap stocks. They're down over 1.2%. And that's where so many everyday retail investors have their money. The source actually calls what happened there a massacre. Right, and let's be super clear. This wasn't just numbers on a screen changing color. This was real money. Huge money bolting from the country. In just a couple of days, foreign institutional investors, the big global funds, pulled a staggering 16,000 crore rupees out of Indian stocks. To put that in perspective, that's about 1.9 billion US dollars. When that much cash leaves that fast, it's like pouring gasoline on a fire. So what was it? What lit the fuse on this whole thing? Well, according to the source's analysis, the main trigger was a really dramatic and, frankly, aggressive tariff move by the United States. And here it is. This is the move that sent everything into a tailspin. The existing 25% tariff on certain Indian goods was suddenly, without much warning, doubled to 50%. The source doesn't see this as just some minor policy adjustment. No, they're calling it a tariff nuclear option being used against India's economy. So just for anyone who needs a quick refresher, a tariff is basically just a tax on stuff that's imported. It's a tool governments can use to make foreign products more expensive. Sometimes the goal is to protect their own industries, but as we're seeing right now, it can also be used as a pretty powerful weapon in a trade fight. So what was the official reason given for this? Well, the source points directly to this post on social media. The tariff hike was tied, very explicitly, to India buying Russian oil. It frames this whole economic action as a direct response to a geopolitical decision. A tariff hike this big doesn't just rattle the stock market. As the source analysis lays out, it creates this massive tsunami that sends shockwaves crashing through really important parts of the actual real economy. This table from the source, wow, it really breaks down the domino effect. You've got this potential 150% tariff threat just hanging over the pharma sector, what people call India's pharmacy to the world. The 50% tariff is already hammering industries like textiles and gems, which employed tons of people, creating a very real risk of mass job losses. And then you see real estate crashing, not even because of tariffs, but because of a whole other shock that hit at the exact same time. As if the tariff news wasn't bad enough, the market got slammed with the second jolt. Everyone expected India's central bank, the RBI, to jump in and cut interest rates to kind of soften the blow. But instead, they held rates steady. That surprise just slammed the brakes on sectors like real estate and banking, which are super sensitive to interest rates, and it just made the panic even worse. So with all this chaos swirling around, the analysis from Himalayan stocks Crore basically asks investors, okay, so what do you do now? They argue that moments just like this one always put you at a crossroads, with a choice between two very different paths. And here are those two mindsets. On one side, you've got the panic response. Fear takes over, you sell everything low, and you lock in your losses. But on the other side, There's what the source calls the buy on dip strategy. That's where you see the crash not as a disaster, but as a discount sale on good company. So how do you actually buy the dip without, getting totally wiped out? The source lays out a specific game plan they call Himalayan fractional investing. The idea is pretty simple. You just don't go all in at once. Say you've got 25,000 rupees you want to invest. Maybe you put in 5,000 today. If the market drops again next week, you put in another 5,000. It's a smart way to average down your buying price and manage your risk when things are this crazy. All right, so now let's zoom out. Let's go from the individual investor to the entire country. According to the source, what moves can India even make in this high-stakes game of geopolitical chess? According to the source, India has a few ways it could play this. It could try to negotiate a whole new deal, or it could give its exporters money to help them eat the cost of the tariffs. Some people suggest pivoting to other markets like China, but the source flat out calls that a stupid argument, saying China is a competitor, not a substitute for the US. Another idea, dropping Russian oil to make the US happy, is labeled the worst option, basically because it would mean giving in to the pressure. So which road does the source think India should take? Well, the analysis is crystal clear on this one. As you can see from the chart, the number one priority, by a huge margin, is direct negotiation with the United States to get this whole tariff crisis sorted out. And that right there kind of brings this whole story together. Whether you're a policymaker in Delhi trying to navigate this mess, or just an individual investor watching your portfolio, the core message from this analysis is exactly the same. When times get this volatile, having a clear strategy is always more powerful than just panicking. And that leaves us with one last thing to think about. In a world with more and more of these trade wars, what's the bigger risk for a country like India? Playing this incredibly difficult high-stakes game, or choosing not to play at all?